The state of Arkansas landed its largest investment in the Governor Mike Beebe era, a $1.1 billion super project. A state-of-the-art steel mill led by investor John Correnti will locate near Osceola, Arkansas, initially employing 525 workers. Joining me to talk business is Grant Tennille, Director of the Arkansas Economic Development Commission. Welcome back to the program, Grant. Good to have you with us.
Great to be here, Robert.
You've had a big week. You've had a busy week.
It has been an incredibly busy week with two great announcements.
Well, but there's all kinds of stuff that goes into those announcements before they become big announcements.
Absolutely.
So let's talk about Big River Steel Mill, this John Correnti $1.1 billion project. How did it happen? How did it all come together? Where was the origin of this?
Well, I think that it's been fairly well publicized that Mr. Correnti has a long-standing relationship with the state of Arkansas. He was the former president and former CEO of Nucor. He was instrumental in locating the mills in Blytheville and has had a home in Blytheville ever since. He tried back in 04-05 to locate a mill on the same site that we're looking at in Osceola now, and at the 11th hour that deal fell through, and he wound up taking it to Columbus, Mississippi in partnership with a Russian steel manufacturer, Severstal. That mill was built and is operating today. So when he got ready to look at the next project, he remembered how much he liked that site. As he referred to it in the press conference, it's steel mill heaven. And we wound up working with him for close to a year before the announcement.
Well, let's talk about who John Correnti is and who some of the other investors in this project are. Can you tell us who all is involved in all of this?
Technically, I cannot yet tell you who all is involved. I have non-disclosure agreements that I have signed. There has been some reporting in the last 24 hours about who some of the major players are likely to be. I will tell you that I believe that the major players will be ready to make an announcement probably on Monday about their role. But John Correnti he's an old-fashioned steel guy. He grew up in the steel industry. He has located and built 14 steel mills around the world in his career, and has done it in the last few years with various investor groups. In this deal, there will be a very large industrial investor and a smaller group of independent financial guys who will invest, in addition to, as has been reported, the Arkansas Teacher Retirement System.
Let's talk about some of the incentives and safeguards that you guys built into this proposal for the state of Arkansas. Obviously, the state's going to be putting in quite a bit to entice somebody to build something this large, although there's a lot of private money that's going to be putting this up. Work through a little bit of the incentives and the safeguards that you feel really good about. Sure. In terms of guarding taxpayer money.
Well, the basic package, which we will be asking the legislature to approve because we want to use Amendment 82 in order to sell general obligation bonds to raise these funds, is $120 million. It is broken out in 3 different ways. There will be a $50 million grant, which will be largely spent on site preparation and infrastructure. There will be a $50 million loan to the company that will be repaid back to the state. And then there is a $20 million pot that we are putting in that will be matched by $20 million from the company. And that will be for sinking pilings into the ground up there on the banks of the Mississippi River.
You don't want this billion-dollar project to fall into the river and just float on down to Mississippi. So.
We would prefer not. But we think we have a pretty good idea of what we're going to find when we start to sink those pilings. But we wanted to make sure that if it ends up costing a lot of money, that our exposure to that was limited. So we're putting in $20 million, they're putting in $20 million. When all 40 is gone, the next dollar, all the way to the end of the piling process, will belong to the company. So our exposure is limited to $20 million.
Talk about the one component you talked about was the $50 million loan to the
Yes.
company. What's the advantage to that being part of the bond issues? A lower interest rate for the company, or?
Absolutely a lower interest rate for the company. Again, when you're talking about general obligation bonds, the state of Arkansas has a good credit rating, and so we have access to very cheap capital. The way we've structured that is that we will sell a separate tranche, a separate $50 million tranche of bonds that the company will borrow. They'll be 20-year bonds. The company has an option to pay those bonds back. If they do it before the end of year 4, they get a $5 million discount, so a 10% discount. The other caveat on that is they pay it back at the end of year 4, and they announce the second phase of the mill. They get to take the $5 million discount.
All right. Is there any possibility, and you've had some discussion with legislators who are going to have to sign off on this general obligation
Sure.
of bond issue with the state, any interest in maybe finding a way to just do this thing in cash and not have to do 20 years of a bond issue, or 10 or 15, whatever it may turn out to be?
I have heard some of that, and there has been some discussion this morning, in fact, with the governor. And obviously, it is not my job to determine, how we're going to make this project work in relationship to the larger budget. I will say that there needs to be a solid understanding of where the GIF money that exists right now is headed. And the other thing I'll say is that we need to replenish the governor's quick action closing fund. And so to the extent that there's a desire to do this project with more cash and less bonded indebtedness, I could support that as long as the money to replenish the quick action closing fund is still there.
What's the quick action closing fund? What's it down to about now? Is it at zero?
No, it's not at zero, but we're getting close. I believe that allocated but not spent yet is under 30. But I think unallocated, we're probably at about $12 million.
You need to get some money in your bank account,
We
what
do.
you're saying there. Tell me a little bit about the time frame for Big River Steel. I think at the press conference this week there was the discussion that it could be several months before the first spade of dirt is
Absolutely.
turned. And then once that happens, you're still looking at a good 18 months to 2 years
Right.
before you've got lights on and you're actually producing product.
That's absolutely right. I think in a perfect world, they would like to close in July. I think realistically, it may be more like September. And by close, and this gets us back to your question about some of the safeguards that we've put in place. The way the deal is structured, the equity partners will put their money, their $300 million, in cash and letters of credit that'll be as good as cash into an escrow account on a date certain, probably in the third quarter. Once their money is in the account, they'll turn to us and say, sell the bonds. So all of their money's got to be there, as well as the promises and the financing for the rest of the money before we'll ever sell the bonds. Then our money will flow into the escrow account once the bonds are sold. Then the company has to spend $250 million on the project, turning dirt, beginning to buy equipment, all of those things, and all of this will be audited. They have to spend $250 million before they can spend one of our dollars. And it really was designed to make sure that the state wouldn't, A, sell the bonds and have the deal fall apart, because once you sell the bonds, having to sell the bonds and call them back immediately hurts the state's credit rating. So we wanted to make sure that everybody was in before we were going to sell the bonds, and then we want to make sure that dirt is turning and work has begun before the state starts to spend its money. But then once all of that happens, they've told us 20 months.
You've had conversations with legislators and legislative leadership. What's your sense? I know they tell us publicly we want to see details before we we're optimistic, but we're cautious at the same time. What's your sense of their optimism, pessimism, realism about the project?
I think there's a lot of excitement, but I know that the legislators that I've spoken to take their responsibility in this area very, very seriously. The people approved Amendment 82 and said, we want this tool to exist, but they gave the legislature an important responsibility. When we present the unratified Amendment 82 agreement to the legislature, which will probably happen sometime in the next 10 days, it starts a clock, and the legislature has the authority at that point to hire an outside economist to provide them with a third-party independent opinion that says this is a good deal for the state, this is not a good deal for the state. I'm very proud of this deal. I feel like it is a strong deal for the state of Arkansas, and I think the legislators, when they go through this process, will ultimately agree. But it's important that they do their own due diligence and uphold their responsibility. This is a lot of money, and it is not without risk. I think we've done everything we know how to do to minimize risk, but there's risk in any of these kinds of deals. So I want the legislature going into this eyes wide open and understanding every aspect of the deal, because I've chosen Arkansas as my home, and I'd like to live here for the rest of my life, and I don't want all of this riding on my shoulders.
Well, I'll talk to Speaker Carter and Senate President Lamoureux. I'm not an economist, but I kind of play one on TV. Maybe they'll hire me as their third-party executive here. Let's talk about another very positive announcement you had this week. Very quickly, in Conway, Inuvo, a technology firm, moving their corporate headquarters from New York to Conway. How did you swing this deal? How did Conway swing this deal?
Love this deal. Love it because of the message that it sends. The short answer for how we swung this deal, as with so many things in Conway, is Charles Morgan. Charles has a relationship with this company. He is an investor. Some of the company leadership got its start at Axiom under Charles years ago. And he started talking to them. They're a young company. They've grown very, very fast. Their net last year was somewhere in the $50 million range, but it was 49% growth in 1 year. So they're growing real fast, and their expenses were growing like crazy. And Charles sat them down and said, I really think you can control some of these costs if you get out of New York and move to Conway. Yeah. And they brought the senior leadership team here during the Christmas holidays. They were here during Snowmageddon and showed them around town, and they fell in love. And they met with the folks at UCA, met with other leaders around town, and realized that they can get the workforce they need in Conway, Arkansas, which is a truly exciting story for the whole state.
All right, real quick, we got to run. I got one more question for you. Got any more super projects? Any more China, any more French connections in the works here in Arkansas?
We've got one very large project that is pretty far down the road, and I have a feeling that before the end of 2013, we'll be back with another very large announcement.
All right. He is Grant Tennille, making a prediction there. He's with the Arkansas Economic Development Commission. Thank you for your time.
Thank you.